9 members of the CBN MPR team yesterday voted to raise the key rate by 100 basis points, while 2 members voted to increase the rate by 50 points. But in the end, majority carried the vote. In reaching the conclusion, the Apex Bank said it was agreed that it was necessary to push the anchor interest rate to 16.5% to tame the rising inflation, which increased by 21.09% in October 2022, according to the National Bureau of Statistics. Although Nigerian stocks maintained an upward trajectory yesterday by 0.6%, there are worries that this will drive away investors. Well, no better person than to look at this than a marvel in the industry itself. So we'll be speaking with Christian Ayalasi Isaac, investment and securities analyst. Good morning. Good morning, Christian.
Good morning. Good morning.
Nice of you to join us today. So let's have your view on the bumping up of the monetary policy rate by the central bank. What do you make of this?
Well, it was expected. It was expected that the CBN is likely to adjust the rate further. But what have taken a lot of analysts by surprise is that they went.
Hello, are you with us? So it was trying to land on his thought, saying that it took analysts by surprise. I don't know if he's back. Okay, so you were saying that there were short-term expectations from analysts. They were expecting 50 basis points, but rather the central bank increased the rate by 100 basis points from around 15.5% in September to 16.5%. I don't know if you're still with us. Are you with us, sir?
Yes, I can hear
you. Please continue on the thought.
Yeah, what I was at the point of saying that what may have taken analysts by surprise is the extent of the hike. Most of us had expected that something like 25 to 50 basis points would have been more appropriate. But well, again, the CBN has it is within their authority to say that the rate has to be at 100 basis points. They must have some reasons behind that. But honestly, we all know that you can use interest rate to either stimulate economic activities or reduce economic activities. Using the interest rate at this point, when we have even seen that from the consumer price index and the purchasing managers index that was released lately against the month of October, we saw that there are unmet inventories. Or unmet orders rather, and we also have unsold inventories for most of those of those companies in manufacturing. So we are going to see a further tightening of liquidity within the system. It is expected that some companies will not be able to meet their orders for the festive period. It's expected that some companies might have to lay off, some of their staff as they are unable to meet with the cost of production.
Yeah, let's not
following the hike in the rate.
Yeah, let's look at the stock market now, which is our focus.
Hello.
Hello. Yes, I can hear you. I'm saying let's look at the stock market now. Are you with me? Hello.
Hello.
I can hear you. Can you hear me?
Yeah, I can hear you at this point.
Now, yeah. What does this mean for the stock market? You've looked at the manufacturing. What does this mean for the stock market?
Yeah. For the increase in the benchmark interest rate, that is the monetary policy rate, has implications for the cost of capital. When the monetary policy rate is adjusted higher, it means that the rate at which the banks will be lending to their prime customers, to business.
Hello. Oh, it was saying it was looking at the effect that the rate hike will be having on the stock market. I don't know if it's with us. Are you with us, sir?
I can hear you. I can hear you.
Please continue on that thought. You were making a very
So with respect to stocks, equities that represent manufacturing companies, maybe you're looking at Nigerian Breweries
Oh.
some other production-oriented companies is going to impact negatively, because what it means is that the companies will not be able to borrow money to finance some of their projects, or borrow money for expansion. And if they cannot borrow money for expansion, or to meet some of their project funding, that means that there is the possibility of layoff, adjustment in salaries for the workers, and you will also see that it's possible that prices of items will also go higher at the end of the day.
All right.
So that is what we expect. On the other hand, if you're looking at banking stocks, it will have a positive effect on the banking stocks and insurance company. Like you saw yesterday, the banking stock index went 1.10%. That of the insurance sector went 0.18%. In fact, interest rate adjustment, the effect of interest rate adjustment is most often simultaneous in the capital market. Why it takes about a whole year, like 12 months, for the whole economy to feel the impact of.
It was saying it was looking at the duration of which the stock market would reap the benefit of the hike. Are you with us, Mr. Christian? Mr. Christian?
Hey.
Yeah, please continue. Please continue.
Yeah, so I was at the point of saying that with respect to banking stocks and insurance stocks, just like we have seen yesterday after trading, that the banking index rose by 1.10%.
Yes.
While that of insurance rose by 0.18%.
Yeah, let me come in here.
Yeah.
When we see hikes in rates like this, it makes bonds and commercial papers more. They get more yield. Wouldn't this take away investors from the stock market?
Definitely. There is no two ways about it. That is why we are saying that the debt money, the debt section or segment of the capital market will become more attractive, because investors want to go for those instruments that have higher yield, that will compensate for the inflationary trend. We have inflation at 21.09% right now. So that is that. And we know that with the hike in this rate, that manufacturing companies will be adversely affected. The only aspect of the stock market that will benefit is talking about banking stocks, and of course too, we have seen more resilience from the telecommunications sector, where because of data utilization have increased significantly as a result of COVID-19 disruptions. So that is that. But again, you know that if you're looking at the relationship between interest rate hike, interest rate upward adjustment, and the currency, the value of the currency, you find out that the adjustment might be in favor of the naira. It might strengthen the naira, just like what happened in the US. Just shortly after the COVID-19, because of the adjustment in rates, the dollar started getting stronger. As we speak now, yes, the dollar has gained significant strength over and above what it was, yes, before the COVID-19 disruption.
Yeah, one school of thought is that the rate hike was targeted at tightening money supply in the economy. What do you think of this?
That is very obvious. The whole idea of raising the rate is to shrink the money supply within the system. But we are also thinking that on the balance, since we are expecting a currency redesign, which also will result in a mop-up of a significant amount of money in circulation, that the monetary policy rate will not have been raised as much as 100 basis points. We are not saying that the rate increase is not expected. We are not saying that the rate increase is not going to be effective in managing money supply. But we are saying that the extent of the increase within this season, when companies have a responsibility to meet increased demand, might not be to the advantage of the economy immediately. But going forward, they will all come together. All these policy measures will come together to rein in inflation finally, and to give us a better economy.
Well, that's a very good one. We'll go on a short break, and when we come back, we shall be wrapping this up.
Thank you.
Yes.